It's Friday, January 30th, 2026. Silver just crashed from $121 to $95. $26 gone in a matter of hours. Gold fell from $5,600 to $4,950. $650 wiped clean off the board. And if you're watching this right now thinking this is just another market correction, you need to understand something. What I'm about to show you is not a correction. It's not volatility, even a crash in the traditional sense. This is the final stage of a pattern that has destroyed every major empire in recorded history. 3 times this has happened. 3 empires have fallen. The sequence is always identical. The outcome is always catastrophic. And right now, today, we are watching it happen again in real time. I'm very clear about what I mean. This is not opinion. This is pattern recognition. And the pattern is so obvious, so mathematically certain, that once you see it, you cannot unsee it. So pay attention, because understanding what I'm about to explain could be the difference between protecting everything you have and losing it all in the next 12 months. Silver crashed 22% this week, one of the biggest weekly crashes in years. And yet, right now, at this exact moment, you cannot buy physical silver anywhere. The Perth Mint in Australia has suspended all sales. The United States Mint has suspended all sales. The Royal Mint in the United Kingdom is completely out of stock. Dealers across India are defaulting on deliveries. Costco, the place where you buy toilet paper in bulk, has implemented purchase limits on silver. Let me repeat that so it sinks in. This is collapsing, but the product has disappeared. Does that make sense to you? Does that sound like a functioning market? In any normal market, when the price crashes, supply floods in. Sellers emerge. Inventory appears. That is basic economics. Supply and demand. But that is not what's happening here. Here, the price is falling while supply is vanishing. The number goes down while the metal disappears from every vault, every mint, every warehouse on the planet. This is not how markets work. This is how empires collapse. And I can prove it, because this exact pattern has played out 3 times before in human history. 3 times. Same pattern, same sequence, same outcome. Let me show you. An empire. For 800 years, Rome dominated the known world. Military superiority. Engineering marvels. A currency that was trusted from Britain to Egypt. The denarius was sound money. Silver coin. Real value. But then something changed. The empire became overextended. Wars in Germania. Wars in Parthia. The military consumed more resources than the economy could produce. So the emperors made a decision. They started debasing the currency. They reduced the silver content in the denarius. At first, just a little. 10%. Nobody really noticed. But then it accelerated. By the year 200 AD, the denarius contained almost no silver at all. It was a copper coin with a thin silver wash. The price of everything exploded. Bread that cost 1 denarius now cost 1,000. Soldiers refused to accept payment in the debased currency. They demanded real silver, or they would not fight. The empire could no longer pay its legions. The borders collapsed. Barbarian tribes flooded in. By 476 AD, Rome was gone. Erased from history. The pattern? Overextension. Debasement. Currency collapse. Empire extinction. Verified. Empire. In the 1600s, the Netherlands was the wealthiest nation on earth. The Dutch East India Company was the most valuable corporation in human history. Amsterdam was the financial capital of the world. The guilder was the global reserve currency. Dutch ships controlled the spice trade, the silk trade, every major trade route that mattered. But then came the wars. The 80 Years' War with Spain. The Anglo-Dutch Wars with England. Constant military conflict draining the treasury. The Dutch government started borrowing amounts. They issued bonds. They created debt instruments. They promised to pay it all back later. But later never came. By the early 1700s, debt servicing consumed more than half of all government revenue. They were borrowing just to pay interest on previous borrowing. The classic debt spiral. Investors lost confidence. Capital fled Amsterdam. The guilder collapsed. Within a generation, the Dutch Empire was a shadow of its former self. Britain rose. The Netherlands fell. The pattern? Overextension. Debt spiral. Currency collapse. Empire extinction. Verified. British Empire. The sun never set on British territory. 1/4 of the world's land mass. 1/4 of the world's population. The pound sterling was the unchallenged global reserve currency for over a century. If you wanted to do international trade, you did it in pounds. London was the center of global finance. But then came the wars. The First World War. The Second World War. Britain spent everything. They borrowed from America. They sold off assets. They liquidated colonial holdings. By 1945, Britain was functionally bankrupt. The empire was drowning in debt. The pound was overvalued and unsustainable. In 1949, they devalued the pound by 30% overnight. 30% of your savings erased while you were sleeping. But it wasn't enough. The empire continued to crumble. India gained independence. Africa decolonized. And then in 1971, the final blow. The United States ended the dollar's convertibility to gold. The Bretton Woods system collapsed. The pound lost its last anchor to real value. Britain went from global superpower to regional economy in less than 30 years. The pattern? Overextension. War debt. Currency debasement. Loss of reserve status. Empire extinction. Verified. Empires. 3 collapses. Same pattern. Same sequence. Same outcome. And now let me show you why this matters to you right now, today, in 2026. Because the United States is not approaching this pattern. We are not at the beginning stages. We are in the final phase. The exact same final phase that preceded the collapse of Rome, the collapse of the Dutch, the collapse of Britain. The data is undeniable. Mathematical certainty. Not might happen. Will happen. The United States national debt is $36 trillion. Trillion with a T. That number is so large most people cannot even conceptualize it. But here's what matters. 20 years ago, the debt was $8 trillion. It has more than quadrupled in 2 decades. And it is accelerating. We are adding $1 trillion in new debt every 100 days. Every 100 days. That is $10 billion per day. $100 million per hour. $7 million every single minute. The debt is growing faster than the economy. That is the definition of unsustainable. But it gets worse. Interest payments on that debt now exceed $1.4 trillion per year. That is more than we spend on national defense. More than we spend on Medicare. We are borrowing money just to pay the interest on the money we already borrowed. That is the Dutch death spiral. That is the pattern. Just like Rome debased the denarius, just like Britain devalued the pound, the United States is debasing the dollar. Not through silver content reduction. We are not that honest anymore. We do it through monetary expansion, money printing, quantitative easing. Whatever euphemism makes it sound acceptable. The Federal Reserve has expanded the money supply by over 40% since 2020. 40% more dollars created out of nothing in just 6 years. Every new dollar created dilutes the value of every existing dollar. Debasement. That is inflation. That is theft. The Roman emperors clipped coins. We click buttons on computers. The method is different. The result is identical. Your purchasing power is being destroyed in real time. The price of everything is going up not because things are becoming more valuable, but because your currency is becoming worthless. That's the terrifying part. The smart money already knows this. They have known for years. And they are leaving. Not all at once. Not in a panic. Quietly. Methodically. Systematically. They are converting paper currency into hard assets. Real things. Things that cannot be printed. Things that cannot be debased. Gold. Silver. Land. Commodities. Look at what China is doing right now. This week, while American banks were dumping paper silver contracts and crashing the price on COMEX, China drained 27 metric tons of physical silver from the Shanghai Futures Exchange vaults in a single day. 27 tons. 170,000 ounces removed in 24 hours. At this rate, the Shanghai vaults will be completely empty in less than 3 weeks. And China has already restricted silver exports. They classified silver as a strategic national security asset. They are treating silver the same way they treat rare earth minerals. The same way they treat materials for weapons and AI infrastructure. Think about what that means. China is restricting exports so no silver leaves the country and simultaneously draining their own exchange vaults, moving metal from public warehouses into private storage, into government reserves. They are hoarding physical silver while the paper price collapses. They know what is coming. They are preparing. Not just China. The Perth Mint in Australia, one of the most respected mints in the world, producing coins for over a century, sent a notice to distributors on Thursday morning before the crash even happened. The notice said they have a large backlog of orders due to increasing worldwide demand, and they are pausing all wholesale orders until February 23rd. Almost a full month of no new orders. They are rationing. When a government mint in one of the largest silver-producing nations on Earth tells you they cannot get enough silver, that is not a supply chain hiccup. That is a systemic breakdown. The United States Mint suspended all silver numismatic product sales. When products came back online, prices had jumped from $91 to $169, an 86% price increase overnight. The 2026 American Silver Eagle that was supposed to release in January has been delayed until late February. Subscriptions are already sold out. The Royal Mint in the United Kingdom is out of stock on silver bars. 1 kilogram bars, the most basic common format, gone. In India, one of the largest silver markets in the world, dealers are not just running low. They are defaulting on deliveries, taking payment and failing to deliver the product. People are paying for silver and receiving nothing. Costco, the wholesale retailer where you buy groceries in bulk, has implemented purchase limits on silver. They are rationing. A store known for selling everything in bulk is now limiting how much silver you can buy. I connect this for you because this is where it gets truly frightening. There are two silver markets: the paper market and the physical market. The paper market is COMEX, futures contracts, ETFs, derivatives. This is where billions of dollars of silver trade every single day. But here is what you need to understand. They are not trading real silver. They are trading promises. Contracts. Digital entries in a computer system. Most of these contracts never result in actual physical delivery. They are just bets. Financial instruments. The paper market is a casino. Change hands, but most players never see or touch any actual metal. The second market is the physical market. Real silver. Coins you can hold. Bars you can stack. Metal that exists in the real world. These two markets are supposed to be connected. The paper price is supposed to reflect what real silver is worth. But right now, at this moment, they are completely disconnected. Broken. The paper market says silver is $95. The physical market says you cannot have any at any price. One of these is lying. The computer screen or the empty vaults. Which one do you believe? Here's the proof that this is coordinated manipulation. Nearly all the selling this week happened during U.S. market hours. Not Asian hours when Shanghai trades. Not European hours when London trades. U.S. market hours. When New York opens, silver dumps. Aggressive selling. Red candles. Price collapses. When New York closes, silver stabilizes. Sometimes it even rises during Asian trading. Then New York opens again and the selling resumes. Pattern repeated every single day this week. It is not random. It is not organic. It is coordinated. American banks are selling paper contracts for silver they do not have. They are creating digital supply out of nothing. Pressing buttons. Moving numbers on screens. Meanwhile, buyers in China, Japan, India, Dubai, the Middle East, they are taking delivery of real physical metal. They are loading bars onto trucks. They are draining vaults. They are removing actual silver from the system. One side is playing a video game. The other side is taking home the prize. Here is where the collapse becomes personal, where it stops being abstract numbers and becomes your life. Because when a reserve currency collapses, when an empire enters terminal decline, it does not happen on Wall Street first. It happens in your neighborhood. It happens at the grocery store. It happens at the gas station. It happens when you try to take money out of the ATM and the screen says transaction declined. Not because you are broke, but because the bank does not have physical currency to give you. It happens when you go to the supermarket and the price of bread has doubled since last month. Because wheat became scarce, but because the currency became worthless. It happens when your paycheck arrives and you realize it will not cover rent anymore. Not because you got a pay cut, but because the value of every dollar has been cut in half. This is what currency collapse looks like at ground level. This is what happened in Rome when soldiers refused debased denarii. This is what happened in Weimar Germany when people brought wheelbarrows full of cash to buy a loaf of bread. This is what happened in Zimbabwe when they printed $100 trillion notes that could not buy a bus ticket. Same pattern, same sequence, same outcome. Not at the cliff. We have already walked off it. We are in free fall right now. The ground is rushing up, and most people have not even realized they are falling. They are still checking their portfolio, still trusting the numbers on the screen, still believing the system will hold. But the system is not holding. It is breaking in real time. Right now, lease rates. Silver lease rates are the cost to borrow physical silver. In a normal market, lease rates are near zero, 0.3%, 0.5%. Right now, silver lease rates have exploded. Some reports show 8%. Others show rates as high as 39%. 39% to borrow silver. That is a panic signal. That means physical silver is so scarce that holders are demanding massive premiums just to lend it out temporarily. When lease rates spike like this, it means the physical market is broken. It means there is not enough real metal to satisfy demand. It means the system is failing. Here's the part that will blow your mind. The lower the paper price crashes, the faster physical silver disappears. Lower prices create more demand. More demand drains supply faster. Every smart investor in the world just saw a 22% discount on an asset that mints cannot even keep in stock. What did they do? They bought everything they could find. The crash did not reduce demand. It created a tsunami of new buying. The manipulation is making the shortage worse. The more they suppress the paper price, the faster the physical metal vanishes. This is the end game. This is what happens when a system built on paper promises confronts physical reality. Physics wins. Reality wins. You cannot print silver. You cannot create it with monetary policy. You cannot conjure it into existence with a Federal Reserve press release. It is a physical element. Limited supply. And when physical demand overwhelms physical supply, price must adjust. The paper market can delay that adjustment. It can manipulate it. It can suppress it for days, weeks, months. But it cannot prevent it forever. At some point, the dam breaks. And based on what is happening right now with mints shutting down, vaults draining, dealers defaulting, lease rates exploding, I believe we are very close to that breaking point. 5 consecutive years, global silver demand has exceeded mine supply. 5 years of deficits. Every year since 2021, the world has consumed more silver than miners produced. Industrial demand for solar panels, electronics, electric vehicles, AI infrastructure, medical devices. Investment demand for coins, bars, ETFs. Total demand exceeds mine supply by hundreds of millions of ounces every single year. The cumulative deficit over 5 years is over 800 million ounces. Where did that silver come from? It came from above-ground stockpiles, vaults, reserves, inventory built up over previous decades. Think of it like a bathtub. Mine supply is water coming in from the faucet. Demand is water draining out. For 5 years, more has drained out than came in. The bathtub is emptying. Those stockpiles are now dangerously low. The buffer is gone. The Shanghai vaults are at critical levels. COMEX-registered silver has been declining for years. London vaults have seen massive drawdowns. The cushion is depleted. There is no slack left in the system. No emergency reserves. And with mints suspending sales and dealers defaulting, we are seeing the consequences of 5 years of structural deficits finally catching up to reality. Not a short-term problem. This is not something that resolves next week when markets calm down. What we are witnessing is a structural crisis that has been building for years and is now accelerating. The pattern is complete: overextension, debt spirals, currency debasement, and physical scarcity. This is the final stage, the stage that comes just before collapse, just before empire extinction. And like Rome, like the Dutch Republic, like Britain, the people at the top already see it coming. They are moving their wealth into hard assets. They are protecting themselves. The real question is whether you are doing the same. Here is what happens next. Paper and physical markets fully diverge. The paper price of silver may crash, spike, or swing wildly under manipulation. But physical silver becomes harder and harder to find. Premiums rise. Availability collapses. Eventually, you simply cannot buy real metal at the paper price. This is already happening. Japan is paying massive premiums over spot. Dubai the same. The paper market says one number. The real world says another. And that gap widens every day until paper pricing no longer matters. I've seen this before. In 1979 and 1980, paper and physical silver disconnected. Dealers ran out. Premiums exploded. Even as prices moved, people could not find metal to buy. Eventually, paper was forced to catch up. Silver went from $6 to $50 in months, one of the greatest commodity moves in history. I am not saying the exact scenario repeats. Markets are different now, but the core dynamic is identical. When physical demand overwhelms physical supply, price must adjust. Paper can delay reality. It cannot stop it. Paper cannot mine silver. It cannot create metal. At some point, physical reality wins. It always does. Right now, there are three types of people. The first is scared, panicking at the crash and selling. The second is confused, seeing prices fall while metal disappears. The third understands. They see the paper crash as manipulation and the physical shortage as reality. They recognize this moment not as a crisis, but as an opportunity. This is not a normal market. This is a wealth transfer. Every collapse triggers one. Wealth does not vanish, it moves. From panic to preparation. From paper promises to physical assets. From those who trust the system to those who understand its limits. History proves this pattern again and again. Right now, the paper price is crashing. The metal is disappearing. One of these things is real and one is not. You get to choose which one you believe. The pattern is clear. The outcome is certain. Gravity does not care whether you look down. The ground is coming. Choose wisely.